Hi, good afternoon, everyone. Thank you for joining me. Today, using ValueLine's digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going forward, I'm going to recommend one stock to buy right now. After the presentation, as mentioned, we have allotted time for questions and answers. Also, if you would like to revisit this presentation at a later date, it will be posted on ValueLine.com and our YouTube channel within the next 48 hours. To start, for those joining us for the first time, I want to provide a brief overview of who we are at ValueLine. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the ValueLine Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by ValueLine's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, ValueLine has no investment banking business with any company, including the 1,700 that are included in this service. ValueLine does not execute trades for its subscribers, and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. As a jumping-off point for our stock search, let's start with an overview of the economic situation, as well as the ValueLine Research Department's view of the stock market. The following content was prepared by Harvey Katz, ValueLine's chief economist. A spirited economic advance appears to be securely in place, even as a few soft spots begin to surface. For example, job growth, non-manufacturing activity, and housing starts are all showing notable strength, while business confidence remains high. Still, as September concludes, we are seeing some slippage in exports, lesser improvement in manufacturing output, and a flattening in retail spending, with sales at department stores especially soft. Also, the Federal Reserve's Beige Book economic summation, while noting that the economy has been growing at a moderate pace with tight labor markets, also opined that certain businesses, citing trade tensions, had opted to scale back or postpone capital investment. We think any late-year deceleration will be incremental. Indeed, even with these wrinkles and the negative impact from Hurricane Florence, our sense is that the fundamentals are sufficiently strong to avoid much easing in business activity at this time. As such, following the breakout second quarter, in which GDP jumped 4.2%, growth could still average 3.5% or more in the current period. The stars are fairly well aligned. Our thinking is that GDP, aided by early rebuilding efforts following the ravages of hurricane season, should also exceed 3% in the fourth quarter and then remain in the satisfactory 2.5% to 3% range in 2019. Such a performance would likely help keep earnings in an uptrend over the next several quarters and enable the stock market, up strongly of late, to rally further. Meanwhile, there are concerns offshore and in the political arena. Specifically, there are the global trade skirmishes, especially with China, where actions and countermeasures continue. Stateside, the midterm elections loom large with their potential to shift the balance of power and possibly economic policy. The Federal Reserve likely remains wedded to a well-defined monetary course. Here, the central bank is expected to raise interest rates when it meets today and tomorrow. Moreover, we think the Fed will follow up this presumptive rate action with another hike in borrowing costs in December. In conclusion, we think the investment picture is still sufficiently bright for most investors to stay the course with a carefully selected package of equities. Personally, I think Harvey Katz's views are on the mark, and I'm going to use themes from his report in our search to find one stock to buy right now. For instance, he mentioned the careful selection of equities. Thankfully, Valueline provides the tools and information to incorporate factors such as this into an investment strategy, which we will tackle in a few moments. For now, however, please note that we are currently on our homepage, www.valueline.com. On this page, you can access, free of charge, daily market commentaries, as well as general interest articles that are written by our analysts. Examples of such content are analysis of economic releases and quarterly earnings supplementary reports on the 30 components of the Dow Jones Industrial Average. Please be aware that within a few weeks, September quarter earnings season will begin, and I encourage you to check back on Valueline.com for updated news and analysis in regard to our coverage of the Dow 30. I am now going to sign in with my username and password. After entering my credentials, I am taken to the welcome screen. From here, I can quickly get to many important areas of our website, including Browse Research, which is the main home page for our core equities products. I can also head to our home pages for our monthly stock selection services, as well as our investor tools. As you know, the point of this presentation is to find a stock to buy right now, so let's go to the screener and get started. This tool can also be found via the Find Ideas tab at the top. Subscribers have access to more than a dozen preset screens, as well as almost 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. I am now going to run a screen with the information we have discussed, as well as add some other worthwhile variables. The goal will be to find equities that are relatively safe, inexpensive, and are expected to perform well over the near and long terms. As mentioned earlier, Mr. Katz's market conclusion includes the phrase, a careful selection of equities. Personally, whenever I am conducting a stock search, I always prefer to remove riskier equities, and there are numerous risk and volatility measures, but we recommend Valueline's proprietary safety ranks. The safety ranks measure the total risk of a stock and is arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. Thus, let's focus on stocks ranked 1 or 2. So I just click on the field and click on 1 and 2. These are financially sound companies, and their stocks have a history of relative stability. For those that don't know, our safety ranks are derived from our financial strength grades and our price stability scores. For more information here, I recommend a read of our ranking system guide, which can be accessed via the investment education section of our site. Several of the major market indexes have recently hit new highs, and some stocks boast valuations that appear quite lofty and in all likelihood are unsustainable. Thus, let's try to weed out such stocks by utilizing the price-to-earnings ratio field. Please note that our current PE is calculated differently than other sources. At Valueline, we utilize a combination of actual results and our estimates to calculate this PE. More specifically, at present, our PE includes the 12 months of earnings to March 2019. So that incorporates the recently reported June period and our estimates for the next 3 quarters. We feel that this is the best method for using PEs, but all strategies can work. Just make sure when you are comparing stocks side by side that you are utilizing the same calculation. For our search, I want to note that the median PE for the 1,700 stocks that we track in the Valueline Investment Survey is 18.3. So let's target stocks trading at lower multiples. I'm going to set the high range to 18, and importantly, the low end to 5. Having a low threshold is important since it will remove unprofitable companies as well as firms that are struggling and are trading on something other than fundamentals. This would include companies that are going through a serious legal matter, management shakeup, or something similar. And we click on Filter. Now let's focus on performance. I want to isolate stocks that Value Line expects to outperform the broader market over the near and long terms. For the short term, I'm going to use our popular and time-tested timeliness ranks. Like safety, the ranks are from 1 to 5, with 1 being our top rank. 1s and 2s are expected to outperform the market over the next 6 to 12 months. 3s are likely to mirror the market, while 4 and 5s may lag. A great deal of information on the ranking system for timeliness is available in our guide, but I should mention that although the calculation is purely quantitative and proprietary, the system is based on a number of factors, including earnings results and stock price action. So let's add the 1s and 2s to our screen. Okay, down to 14 results. We're getting close. My last field will focus on potential stock price appreciation over the long term. This is a good time to mention that for all 1,700 stocks in the Value Line Investment Survey universe, we create 3 to 5 year financial projections. I want to highlight that Value Line is one of the very few research houses that provide financial projections that far out. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. Using these values, we then create a target price range for each equity. For the final field, I want to tap into this and include the projected 3 to 5 year annual total return percentage, and I'm going to focus on the low end of the range to be conservative. And I'm going to use 10% as my starting point, which you have to enter as 0.10. That's a bit higher than the historical annual rate of return for the major stock market indexes going back decades. Seven results, which is nice and manageable. According to our criteria, these stocks are relatively safe, are trading at reasonable price to earnings multiples, and according to proprietary Value Line metrics and projections, are expected to perform well over the near and long terms. Several of these may well fit nicely in your portfolio. However, only one can be today's stock to buy right now. And while preparing this presentation, I evaluated each one and discussed their respective prospects with my team of analysts. All told, I am recommending Allstate Corp, ticker ALL. Before I go any further, I want to point out that screens can be saved and revisited later by utilizing the button at the top. Let's now get some more information about Allstate. Clicking on the company name will take us to the equities digital report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, or hidden so you can create your own customized stock report. Once I alter the presentation to my liking, I can save the changes from the sliding horizontal action bar. The next time I come to the stock report, it will look the way I set it up. I can also apply these changes to other equities. Most of you are probably familiar with Allstate, but I want to provide some quick details about the company's operations. This information is provided in the business description module. The Illinois headquartered corporation is one of the largest property and casualty insurers in the United States. It offers automobile, non-standard auto, homeowners, and other insurance products. Allstate employs more than 42,000 individuals and has a market capitalization that exceeds $34 billion. Moving on, how has the stock performed of late? From the valuation module, I can quickly pull up a stock chart. As you can see, all appears to be similarly priced as it was earlier this year, but it has perked up of late. We will get into in a moment. and the stock is the yellow line. Let's take a look at the commentary module to get some information in regard to Allstate's recent results. This was published by Alan House, editorial analyst. Allstate is currently firing on all cylinders. Earnings from operations, which exclude capital gains and losses from operations, clocked in at $1.90 for the second quarter, which represents a 37.7% increase over the previous year period. The company benefited from a 94.9% combined ratio, which marked a 1.7% improvement from last year. This implies that the company generated $5.10 in pre-tax income for every $100 in policies insured. Net premiums earned also increased 4.9%, reflecting favorable pricing trends across many product lines. Management also does a good job of underwriting risk, and its promotional strategy is among the best in the insurance industry at present. This is a good time to stop and discuss why I'm highlighting an insurance company following a major hurricane. Some of you probably assume that when a significant natural disaster hits, insurance companies pay out claims, which leads to hefty losses. While this can happen, the losses are often short-lived and affect only 1 or 2 quarters. What follows tends to be very beneficial for insurers. Those that didn't have policies before the event typically run out and buy insurance, and those that had policies renew at a higher than usual rate. The elevated demand provides insurers with pricing power, and they can often raise the cost of the coverage. The larger insurers, such as Allstate, also benefit from their broad range of offerings, market reach, and well-known brand. I now want to quickly highlight our classic one-page reports, which are available for all digital subscribers. They are available using the button on the top right. Just a quick glance at the statistical array, or the main numbers section. We can see that the company's premiums, investment income, dividends, and total assets are all trending in the right direction. In the commentary, we do mention that earnings are expected to fall slightly in 2019, but that is mostly attributed to tough year-over-year comparisons, and we still expect a hefty profit. Looking further out, on the top left, in the projections box, we see that Value Line expects all to trade far higher than its current price of around $100 per share. All told, Allstate offers excellent annual total return prospects to the 2021-2023 timeframe. What's more, on a risk-adjusted basis, the issue is a clear standout. Summing it all up, Mr. House's commentary closes with, these shares are a solid all-around selection at the recent price. Indeed, they are ranked to outdistance the year-ahead market averages, while 3 to 5 year capital gains potential is above the Value Line median. We look for the insurer's underwriting margin to remain above the industry average and profitable, barring an overage of catastrophes over the long run. Allstate Corp., ticker ALL, is the stock to buy right now. I hope you found Value Line's screener and process of finding worthwhile stocks easy and informative. I also encourage our subscribers to utilize the watch list and alerts tools. The watch list allows you to create a list of stocks that you own or are monitoring and view them side by side. As for alerts, you can set up notifications and receive an email or text message when a specific event occurs. These include when we put out a new report, when we change a rank, or when a particular stock increases or decreases in value by a percentage of your choosing. In all, more than 15 alerts are available, and these tools can be accessed via Find Ideas. Lastly, I know this procedure does take time. That is why I want to close with a quick introduction to Value Line selection services and model portfolios. For those that want a total investment solution, we offer Value Line Select, Dividend Income and Growth, Special Situations, and Select ETFs. All of these products are published monthly and provide our top picks and sell recommendations for specific investment strategies. To learn more about any of these products, I encourage you to call 1-800-VALUE-LINE for a free sample and/or trial subscription. You can also sign up directly on our homepage, valueline.com. As for model portfolios, part of the Valueline Investment Survey is the weekly Selection and Opinion newsletter. Along with economic and stock market commentary and data, are 4 model portfolios. Each one has a different investment strategy, is actively managed, updated each week, and always contains 20 stocks. The portfolios are overseen by senior analysts. This marks the end of the formal presentation, and I will now tackle your questions. All right, so give me a second to get my bearings. I'm just going to take them from the top. Okay, first question. Do you let us know when to sell stocks you recommend, or is that up to us? For the stock selection services I just mentioned, Select, Dividend Income Growth, Special Situations, and Select ETFs, as well as those 4 model portfolios I just highlighted, we tell you when we recommend to buy and when we recommend to sell. For our main product, like the Valueline Investment Survey, we put out our full reports as well as supplementary reports, and we provide information to subscribers as well. But if you want a firm sell trigger, those selection services is what I would recommend. Question, why wouldn't you wait for a fall with expected earnings to decrease in 2019? I personally don't believe Allstate stock is going to decline in value because of a very tiny earnings drop. And also, you're still talking about a huge profits. And the stock is trading at a very reasonable PE. And I think it's going to be largely priced in. I don't believe the stock is going to go down when 2019 earnings come out. Next question is, why did you select Allstate over Intel? Fair question. There's certainly nothing wrong with Intel. This is a good time to mention that we actually provide our analysis and coverage of the 30 Dows for free on valueline.com, and Intel is, of course, in the Dow. But I picked Allstate just because I liked, right now, the insurance angle over tech. But there's certainly nothing wrong with Intel. Let me just see if there's any more questions. All right, that appears to be it. Thank you very much for joining me today. Have a very pleasant evening. Take care.